Worries of inflation hover over China's economic growth. Our next guest can give us some insight and perspective to China's economy. Jing Ulrich is the managing director and chairman for China equities and commodities at JPMorgan Chase. She is based in Hong Kong, currently here in the United States. Jing, good to have you with us on Taking Stock here on Bloomberg. Give us an update about food inflation, particularly in China. Is that of concern to local officials?
Absolutely. In January, China's food inflation reached over 10%. That's the highest point we've seen in recent months. In the recent year or two, we're seeing the Chinese population changing their diet. People are eating a lot more meat, a lot more protein, so therefore there's more pressure on the supply of grains. In addition, energy prices are much higher, arable land is shrinking, so you have demand going up, but supply is constrained, therefore higher prices.
So are we going to see much higher wages in China? I mean, after all, if the price of food, the price of gasoline is going up, people have got to figure out a way to pay for it.
Absolutely. While earnings are going up quite substantially for Chinese workers, this year we're expecting 20 to 25% wage growth. Last year, the same thing, 25% earnings growth for the Chinese workers. So people have their incomes growing. They can certainly afford more food and better quality food. However, inflation is still very much a concern on the part of the Chinese leadership.
If they do see these 25 to 30% increases in wages, what does that do to China's competitiveness versus other countries in Southeast Asia for basic manufacturing systems and products?
Well, this is certainly a hot topic that the market is debating. We're seeing in the recent year or two Chinese businesses moving to the hinterland of China. The coastal region is getting a lot more expensive, so therefore a lot of companies are moving their operations to central and western China, where wages are lower, and also they get a lot of tax breaks, they get cheaper land. So I think China is not losing its competitiveness because around the region in Southeast Asia, wages are also going up and their currencies are appreciating.
What is the Chinese government's response? Previously, they've raised the level of savings that have to be employed in the banking system. They've raised interest rates. Is this effective?
Well, it's been partially effective. You're absolutely right. We've seen already 3 rate hikes. We've seen 8 increases in the Chinese bank reserve requirement ratio, but more needs to be done. We also think the RMB will appreciate at a slightly faster pace in 2011, which will help curb some of the imported inflation into China.
What about China's domestic economy then? Will this spur even greater, demand for domestic products, more consumption?
Absolutely. The Chinese domestic economy is growing in a very robust manner. We're expecting 10% growth in 2011. Consumption is picking up, driven really by the wage increase we talked about. Also, the Chinese population is still urbanizing. 30 million people move into the cities every year. So the economy is doing very well. However, we need to be mindful of rising raw material costs, rising energy prices, as well as rising inflation caused by rising food.
Jing, does this mean that major Chinese corporations are going to look outside the country in order to acquire resources, acquire companies? In other words, they're going to be building their portfolio, but not in China.
Chinese companies have been on an acquisition drive in the recent years, mainly in the natural resources and energy area. They've gone to Canada, they've gone to Australia, they've gone to Africa and Latin America. They also want to invest in the U.S. In other areas, we're seeing Chinese companies acquiring more brand name companies, especially in Europe, because some of the branded companies are in trouble. They need financing. So China is coming in to pick up very cheap assets, with brand potential. So therefore, we are going to see more Chinese companies acquiring more assets overseas as they're extremely cash rich.
Jing, can you give us a sense of the population's response to the unrest that has been widely reported in places such as Egypt, Tunisia, Libya, Oman, and Yemen, the Middle East? Is the Chinese government concerned?
Well, there is a great deal of concern in China and elsewhere in the world, of course. I think people are watching the political instability in that region very closely. The situation in China is quite different. You have wage increases, you've got the general well-being of the population improving quite dramatically. Everyone has a lot at stake. So therefore, I don't think people will sacrifice their improvement in their lives, in their working careers to demonstrate and cause political instability. However, we need to watch inflation very carefully. This is the single most important challenge facing the Chinese leadership and the Chinese economy right now.
All right, I want to thank you very much, Jing Ulrich, coming to us as the head of Chinese securities at JPMorgan Chase.